Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking metals, let's hit the base metal sector and talk about copper. There was an attempted rally today in copper. The prior three of the last four sessions were both bullish, although the down moves were bigger, so the overall trend still looked lower. And today we attempted a rally that would have been a continuation of Wednesday's rally. Briefly, we got that this morning on terms of continuation, but it failed on some Chinese data as that sifted through the market. China had weaker than expected industrial production and weaker than expected retail sales. So obviously China, being the biggest consumer of copper, the biggest user of copper, that hit the market and kind of snuffed that rally out early. The attempted rally became another down day. Now, there was some other good news. Prior to the extension of the sell-off, copper finished down about 1.3%. The Escondida mine, what's going on in the Escondida mine, last year we had a 44-day strike that interrupted supply, and there was a worker agreement at the Spence mine. Both of those mines are in Chile, and that was seen as optimism that the Escondida miners, who are in talks right now with BHP, who owns that, could come to an agreement without a strike. The Spence mine also owned by BHP. So that was seen as optimism, and that was seen at no supply interruption, which added to the downside pressure that we saw. Not a lot. What really hit the downside was that Chinese data and then the strong dollar. The dollar index rose over 1%. Now today, that wasn't necessarily an extension of FOMC hawkishness that we saw yesterday. It was more added pressure on the euro that pushed the US dollar higher. ECB had a rate decision today. They decided to cut QE in half from 30 billion to 15 billion a month, starting October, going through October, November, December, and then it would end. But more so than that, they made what I consider to be a pretty dramatic announcement about rates, saying there would be no rate hikes until at least the summer of 2019. Considering we're not even technically in the summer of 2018, that's a long ways away, and ECB rates are already negative by 40 basis points. So that was a long time for accommodation, and that pushed the euro, propping the dollar up, hitting copper. That normal inverse relationship between the dollar really in all commodities definitely held out in copper today when you add in the weak Chinese data and the lack of supply disruption from a strike in Chile, which if the miners agree to a plan, there won't be that strike. So a lot of pressure on copper today, down 1.3%, down to 321, really pressuring it. It finished on its lows. This is Bob Iaccino talking copper futures from the CME Group trading floor in Chicago.